Okay, so in this particular video, we are going to study about the concept of profit and loss prior to incorporation. Okay, I'll just tell you all a story. Okay, there was Mr. Virat Kohli, we all know. He wanted to start a new business, but not a new business. So what he decided? He decided to acquire an already existing business. Means the business that was already existing, he just decided that I will buy it from some other owner. Okay, so what he did? He went to Mr. Rohit Sharma. Who had Sharma business. Rohit Sharma already had Sharma business, and maybe Virat Kohli came to know that Rohit Sharma wants to sell his business, and even he wanted to start a business which was already existing. So he went to Rohit Sharma and he told him that I want to buy your particular business. Okay, so Rohit Sharma told him, okay, I will sell you on the end of the financial year. You can buy it from the first day of the financial year. Okay, as per the contract between them, the business was acquired by Virat and he named it as Kohli business. Okay, this was the new business which was acquired by Virat, and obviously he will not keep the same name, right? Sharma, he will rename it. He made it as Kohli business. Okay, now what exactly happened between both of them, or on what date they acquired the business, we will try to understand over here. Okay, so on 1st of January 2020, Virat Kohli acquired the Kohli business, that is the new business. Okay, acquired the Kohli business. But mere acquisition is not enough. Why? Because the registrar of companies says that if you are starting a business, be it a new business or be it an already existing business, even if you are acquiring it from somebody else, then you must acquire a letter of incorporation from registrar of companies. Now they won't just blindly give you letter of incorporation, right? You need to do some documentation, you need to fulfill lots of formalities. So all these formalities, it took a period of 6 months. Okay, after fulfilling all the requirements, Virat Kohli got letter of incorporation on 1/7/2020. That is exactly a period of 6 months. Okay, and then after that, he ran that business for 6 months again. But since he had acquired that business on the very first day of the financial year, he was running that business for the entire year. But the register of company also says that you cannot call your business a company until and unless you have the letter of incorporation. That is why they bifurcate this particular period as pre-incorporation period and the post-incorporation period. And also the fact that your business will become a company only when it acquires a letter of incorporation. They say that whatever profit or loss or whatever profit that you earn after the incorporation period, only that will be treated as your revenue profit that you earn from your business, whereas the profit that is earned prior to incorporation will be called as your capital profits. Okay, so we have got these capital profits and revenue profits. But you know what Virat Kohli did? He prepared a profit and loss account for the entire year. He prepared profit and loss account for entire year. And now, okay, for this entire year, he got a profit of 10,000 rupees. Now, we cannot call it entirely a revenue profit, right? Why? Because this 10,000 belongs to pre-incorporation period and post-incorporation period also. So, this 10,000 he had to bifurcate into capital profits and revenue profits. Now, how he will bifurcate? By allocating the expenses that they have incurred during the pre-incorporation period and during the post-incorporation period. Now, for this, he used this special pro forma of profit and loss account that is used for profit prior to incorporation problems only. Okay, so we will now move on to that pro forma and try to understand how he will bifurcate this 10,000 into capital profits and the revenue profits. Okay, so we have the pro forma for profit and loss account for pre and post incorporation. Okay, so here I have written in the books of Kohli Limited, pro forma for profit and loss account for the year ending on 31st/12/2020. Okay, now the first thing you have to do is you have to show the gross profit. I have got this gross profit from trading account. Okay, this will be a portion on the basis of sales. Now all the expenses that Kohli have shown on his profit and loss account that he have prepared for the entire year, all those expenses he will show them here, and he will bifurcate them as pre and post. Okay, so here we will require the particulars column, the basis column, the pre-incorporation period column, and the post-incorporation period column. Okay, so let's say if I have 500 rupees, I have to bifurcate them into 1:4. Then what I will do? Here I will write 100 rupees and here I will write 400 rupees. Okay, so like this I will bifurcate all the expenses, and at the end I will get the balancing figure. Now whatever balancing figure I get in this column will be called as my capital profit. Okay, and whatever balancing figure I get in my post incorporation period column, or whatever balancing figure I get in my post incorporation period column, that will be termed as my revenue profit, and at the end I will write the total on both the sides. Okay, that is what the basics of profit and loss prior to incorporation is all about. In the next video we'll try to understand how to apportion the expenses on the basis of the time ratio and the sales ratio.